Hello, everyone. Welcome to the show. With me today is a Kiwi who grew up on a beautiful farm in New Zealand. She's a chartered accountant with 20 plus years of financial services experience in banking, working on high profile transformation programs in the City of London. She's been a property investor and London landlord for over 8 years, and since 2018 has invested in or loaned funds on development projects through her SAS pension fund. She's also a SAS trustee, a consultant, project manager, co-author of 2 Amazon bestseller books, and a prolific networker and a brand ambassador. Welcome to the show, Michelle Bryant.
Thank you so much. Thank you for having me.
Great, Michelle. So let's dive straight in, if you don't mind. I'm interested to know why you like investing in or lending on development projects, particularly through crowdfunding platforms.
Right. Well, as a London landlord, I love to be diversified, and I originally was going to scale up and become have a larger portfolio as a landlord, and we're allowed to change our strategies. So I decided to become more diversified and not have all my eggs in one basket. And many years ago, I discovered a crowdfunding seminar and really was quite intrigued by it. And it was back in the early days when you didn't really hear much about crowdfunding, and this was property crowdfunding. And I just thought, yeah, I'm quite intrigued by that, being an accountant with my background. And it's actually something I've pursued. I experimented with personal money and tested out a few platforms, and eventually worked my way into investing with SAS. And I love it for the fact that not just having diversification by investing through a platform, but you can also be geographically diversified and invest in projects all around the country, which I would never have done outright with property, buying, for example, a house in Scotland or Wales. I always like to live near my investment area. So being geographically diversified and platform diversified, if you want to be, just test out platforms that work for you, and see how that goes. And I mean, they're all very different. And be diversified by developer, by strategy. You could be an equity crowdfunding investor or a debt investor. And also, what I like is you can also have your money coming back at different times. So you may decide you want to invest your money for 12 months, maybe 24 months, or even less. I mean, there's deals out there, 3 to 6 months. So there's so many different ways that you can have your money working for you, and it's not all at risk in one place.
Absolutely. And I think the interesting thing about that is, when you are lending or investing with other individuals or SAS funds, you can take a smaller portion in that particular project. So, you can even put in as small as £500 investment or loan.
As little as £1.
As little as £1. So,
in some deals, yes, absolutely. So, I mean, it's a great place for people to, depending on how experienced they are, how much money they're willing to invest. There's a lot of scope for all different types of investments.
Great. And so, in the early days, when you were just exploring crowdfunding, can you walk us through, what you did? How did you, research more of it, and also what were the type of projects that you invested in?
Okay, sure. So in the early days, my plan was always from the outset, get to know the platform. I think that's still very relevant today. And work out what you are looking to achieve, what your goals are. How long do you want your money tied up? So, for instance, if you want more control around the timescales, debt equity crowdfunding is like a loan. So it's got a fixed return with a fixed time, and if that time does overrun, there's generally there's additional interest that can be incurred if things don't go to time. Equity crowdfunding is where you actually get given shares in the actual project with a forecasted return. So they tend to have a higher repayment rate and a forecasted, like I said, a forecasted return. So if your money, for example, you might initially say it's going to be tied up for, expected the development maybe 18 months or 2 years. But, if that project runs late, your returns will be diluted. So it's all comes down to, you really do need to educate yourself and find what your risk appetite is and do your due diligence on the project and try and find out as much as you can about the developer. Do your homework, speak to your network. Don't believe everything it may say on social media about developments, etc., developers. I think, never underestimate your network and do your homework.
Brilliant. That's really good advice. And I think what I, certainly, as a lender investor myself, that comment that you made about, when you do equity investment, if the project overruns and linked to, any type of debt. So most debt, whether it's through crowdfunding or through a lender who's doing bridge finance, for example, or even a traditional bank, more traditional bank, there will be a fixed period of time when an introductory rate, if I can call it that, will apply. And then once you exceed that time frame, a higher rate will apply. So that naturally is going to eat into the profits that that project will provide and produce. And so if you're an equity investor, essentially, if the project overruns, it's going to eat into your profits, and therefore the forecasted return is going to dwindle fairly rapidly if there are overruns. And so here the experience of the developer in that particular project, in that particular location, is also important, because I think if you get a developer who, for example, is doing a yet another cookie cutter development in the neighborhood that they've done that before, they're more likely to be on track. Whereas if you're getting a developer who's doing a project that's very different from what they've done before, in a different area that they've not really operated in before, then the risk is going to be somewhat higher. Now, Michelle, tell me, let's go through the details a little bit. How do you usually scrutinize a project to invest in or lend on when an opportunity comes your way, either through the crowd or directly? How do you usually scrutinize one of those?
Okay, so for me, I love to look at what the developer has done before and see how many years they've been in the industry, what their experience is. They may have been an architect or a builder in a previous life, or a surveyor or a valuer, and what, it may be their first time that they've done a deal on launched a deal on a platform, and that to me doesn't matter if they're inexperienced with crowdfunding. It's all about how long they've been in the industry, how credible and experienced they are. And I also look at what their exit strategies are. And if I'm using my SAS money, my SAS pot, there's a lot of regulation around what you can do with SAS. I look very thoroughly at that exit plan, that exit strategy. And, I like to see several options, but I have to be exceptionally careful with SAS money about how the developers plan to get out. I'm particularly more motivated with debt crowdfunding in the last year or so. Equity is, equity's been great. The returns are higher, but the platform who I work predominantly with now is only doing debt crowdfunding, and I try to find out as much as I can about the individual behind the development company. As I said, their track record. has the platform worked with them before is always a bonus if they have, because you know that their relationships are good, they enjoy working together. How they treat their investors, how they communicate is a big thing. I try to find that out. I mean, it depends on the volume of deals you're doing. And, if you're investing every day on a platform that funds really quickly, you don't have so much time to do your homework. Maybe your risk appetite is, of a different level. You may only be doing small investments, you may be doing large ones. It all depends on what your strategy is. But I try to do my homework. And if I can see they're a repeat developer with a platform and, they've got lots of happy investors, I find out through my network and speaking to contacts, that ticks a lot of boxes for me. And it takes a few years to be able to, have this information and build your network. And when I originally started, I didn't have a massive network. So, don't ever underrate the importance of good contacts.
Absolutely. And I think, something that you mentioned there, Michelle, was quite interesting, is the speed of a project that comes onto the platform being funded might actually determine how much time you have to do the due diligence on the developer and the project itself. There are a number of platforms out there who are very successful in raising funds on a project very, very rapidly. And we see, projects that are funded literally within a minute of it going live on a platform. And then there are other platforms that the projects are, take a little bit longer to be fully funded. And I think, in those, you'll have a little bit more time to do your due diligence. So it's an interesting one. I think certainly the choice of platform and the speed with which they fund projects is going to be an interesting factor to include in your due diligence. So Michelle, when you choose, I know you work a lot now with one particular platform, but more generically, when you choose a platform, because it is, as you said, at the beginning, it's good to diversify your investments through multiple platforms so that you're reducing some of the risk. Crowdfunding is still inherently risky, as the FCA notes. So it's still an inherently risky investment, but by diversifying the platforms, you can reduce some of that risk exposure. How do you decide, which crowdfunding platform to invest or lend through? What's important for you?
I think because I've done an awful lot of talking and I keep going back to that word, networking, over the last few years. I mean, gosh, pre-COVID-19, my social life was pretty much networking and property events. That might sound very dull to some people, but that's the way, life was. And it set me up quite nicely for being in lockdown. I mean, obviously networking continues, but it's not quite the same. But just, for example, the SAS Alliance was a big game changer and it came along at a very great time, because a lot of people get their SSASs and they're like, oh, I don't know what to do. So it was brilliant going along to these evenings, and you'd learn all about the different strategies people do. And crowdfunding is only one part of one strategy that you can do with your SAS. There's many things you can do. And I found it quite interesting. Some people do their loan backs and they do third-party loans to other developers, and then they've got some money left and they're like, oh no, what should I do with it? And crowdfunding quite nicely complements those other strategies. And just speaking to other people, and you hear about other platforms that have come about just in the last couple of years, and then there's been a few around for a while, and one particular platform that we definitely know funds deals very quickly and is in very high regard, and I totally have a lot of respect for them. That platform's, you hear that name very, a lot, and I find it fascinating to see how their deals fund so quickly. So yeah, I've experimented with a few platforms, and I think, get to find out, get familiar with who's behind the platform, what experience they have as an investor or as a developer themselves. Hear what other people's experiences have been like with the platform, and just look and just watch and see, you know, how quickly their deals fund. I mean, obviously not all deals fund within 24 hours. Some go quickly, some go, you know, within a few days. The platform I work very closely with, their deals can go quickly. And just, yeah, talk to people and find what works for you. And I love getting frequent communication updates. I love to work with a platform that does that. They have time for you if you have questions. That's a very important thing. You get to, you know, good communication, emails responded to quickly, calls returned. And, you know, if I have a good experience, I tell people. So,
yeah, absolutely. And, you know, the thing to bear in mind is that, you know, the platform itself is a business like any other. So, you know, if, for example, to use a rather extreme comparison, you know, if you were thinking of moving to a different utility company and you called up their customer service team, and, you know, it takes them a very long time to answer your call, and they're not particularly very helpful with the phone, or, you know, the information that they're giving is not particularly very handy, you know, you're going to be put off. And, you know, that same approach needs to be taken, I think, with the platforms as well. If the platforms are not good with their customer service, bearing in mind you, the lender or investor, are the customer, and on the flip side, the developer is the customer as well. If they're not providing that level of customer service, then you got to then think, well, okay, what else are they going to be falling down on? What are they compromising in terms of quality levels? And, you know, because, you know, it's not this is business at the end of the day, and things will go wrong in business. So when things go wrong, are they going to be communicative enough to you as the lender or investor in getting information from the developer and passing it on? So if at the beginning you're not getting a great experience, then you could probably say that, you know, you're not going to get a great experience after as well.
Yeah, and also, you know, if you have happy investors, whether you're the platform or whether you're the developer, why wouldn't you look after them? Because, you know, keep those guys happy, because they'll invest again. You don't want to have to be looking for, you know, new investors all the time. You want to look after your existing ones. And I just think, you know, if you've got any questions about the security, about the due diligence that's been done on the deal, and, you know, your own personal due diligence, if you've got good communication, that's so important. And I do watch and listen to how people speak to each other. So very important. And it's a small community out there. London and the UK is very small in property. Everybody knows everyone. So yeah, treating people right and keeping communication open. You know, things do go wrong in property. Don't run away and hide and throw yourself under a rock. You know, tell people, because people want to know. The worst thing you can do is go quiet if something goes wrong. And that's for everybody, you know, no matter whether you're a developer with your own investors, nothing to do with a platform, or, you know, no matter how big a developer you are, just be open and keep communication levels frequent.
Absolutely. Michelle, as you know, as a guide, you know, in terms of percentages, walk me through, you know, how do you spread your property backed, you know, investments or loan? You know, do you follow the sort of renowned Svensson model of asset allocation for your investment pool of funds, or do you use something else?
I don't use a fixed model. For me, it's all about opportunity cost, because I think, you know, a great deal might come along and you think, oh gosh, I wish I put more money in that, you know, in hindsight, because that person completely delivered what they said they were going to do. And but then you think, if you're fully utilizing your funds, you don't have anything left. It's sort of like a bit of a fine line by being fully deployed. For example, say you're using your SAS pot, and then you can miss out on something else. So you want to sort of be a little bit investor ready as well. So for me, my approach to that is try and have a mixture of sort of maturity dates. If you're going down for example, the debt or a third party loan road, so your money's coming back at different times. So it's not all tied up to mature at once. So percentages, I sort of have in my mind, being an accountant, my percentages, but sometimes, you know, a deal might come along and you think, oh, I hadn't planned for that, and that sounds good, and actually I might put a bit more in than I thought. So it's not rigid for me. I'd like to be a little bit flexible, and you know, sometimes deals pay back early. I've experienced that. And that's a good feeling. So
Yeah.
I think it's good
Yeah,
to be
absolutely.
flexible. It's good to be flexible, and yeah, and sometimes, you know, you might think, no, this deal's not for me, and go with your gut feeling. If you think something's not right, don't do it. And you know, there's always another deal.
Absolutely. There's never going to be not enough deals out there. There's always deals out there. There's always funds to follow that deal as well. I've you know, even in downturn, I've never really seen you know, deals kind of drying up. It's just structured slightly differently. Michelle,
Yeah.
I'm a big believer in the black box thinking. So with that in mind, you know, what are some of the mistakes or failures that you've experienced yourself or seen others experience in crowdfunding that you'd like to share with the audience? What were the lessons learned?
Okay, so lessons learned. If I rewound a couple of years, I would say always listen to your gut feeling, as I just mentioned. You know, if you were too slow to invest in something, don't beat yourself up. Like say, you know, there's always another deal around the corner. Maybe it wasn't meant to be. You can never do too much due diligence. If you can meet a developer, you know, you don't necessarily get, especially in these days and times, you don't necessarily get a chance to meet developers in person. With crowdfunding, there's not always an opportunity. There are, in some cases, sometimes there are site visits before you invest, depending on the timing of deals, for example. Yes, never, ever, ever be scared to ask too many questions. And if there's any feeling of, I don't want to do this, don't do it. And another thing is, speak to your network, always check people out. Everyone knows everyone. And don't believe everything that you see and hear on social media.
Absolutely, I think that's great, great advice. Now, Michelle, I know that you've contributed to, you know, 2 books. I believe both of them on SAS. Is that right?
Well, actually, the first book was with Mark Stokes, who's a very well-known commercial developer. And he's also the head of the SAS Alliance. And Mark's written quite a few books on SAS. And he also did a book, just under 2 years ago. And it was about advice to your younger self. And he picked 50 people to contribute to that book. And I was very fortunate to be one of them. So I wrote a chapter in that book, absolutely loved it. And then last year, 2020, I was also asked to be part of this book, SAS Superstars. 10 SAS trustees got the chance to write in this book with also again with Mark Stokes and the lovely Louise Wrighton, who I've met through networking in the SAS community. And I wrote a chapter predominantly on third-party loans and crowdfunding on chapter 1. So absolutely loved writing, and a great honor to be asked to take part in these books, which did very well on Amazon. So yeah, it's been
Fantastic.
great feedback. And it's another great way to meet people, especially given we can't meet people at evening events. So people contact me and tell me if they've enjoyed the chapter, and it's a nice way to connect and to help each other. So
yeah, I recall, I think you shared once on a podcast that someone had read the book whilst on a sun lounger on holiday, and then messaged you to thank you for your contribution. I thought that was quite interesting.
Yes, and it was really funny because they actually contacted me afterwards, because I mentioned that again on another podcast, and they went, "Was that me?" And I went, "Yes, it was." So yeah, it's nice. It's lovely to have feedback, and it's lovely to support, you know, the other authors, and it's a great way to get to know people. And yeah, many opportunities have come out of that. So never say no if you get asked to write.
Absolutely. And I think, and this is, part of the reason why I do these videos, because, I've gained some, knowledge and experience over the years. And the guests that I'm speaking to obviously have, loads of experience, such as yourself. And so, by sharing that, information, it helps the audience avoid some of the pitfalls and the mistakes, and they grow to become better at what they want to get to, much more quickly as well, by learning from others.
Yep.
Michelle, do you now only lend or invest through your SAS? Do you still do any lending or investing uh, outside of your SAS fund, sort of directly?
Well, with my SAS, I do third-party loans, as I mentioned. I started off originally with personal investing. I don't do as much at the moment. No, I'm carefully watching what's going on. So, and who knows what 2021 is going to bring. We've got some new interesting milestone dates out there, so I'll be watching how things work around those dates. So I'm just being quite conservative at the moment. No, but my SAS investing continues in the
Right. Okay.
meantime.
And now, Michelle, I've personally, I've dealt with a few SAS funds as private lenders myself, with my sort of solicitor's hat on, and I've had mixed experiences, dealing with SAS professional trustees. Some I find are very laid back, and anything kind of goes, but most are very cautious, and in fact, so cautious that they prevent a lot of deals going through, which to me kind of runs contrary to the whole point of the SAS scheme, which is meant to be, it's self-administered, giving you more control, and it seems to be defeats that whole purpose. So a lot of lay trustees, SAS trustees that I find will defer to the professional trustees, who sometimes I find that actually interpreting the rules for a SAS fund sometimes incorrectly. What are your thoughts on this?
Right. Okay. So SAS administrators. We could talk for days on the subject. They vary so much. Some have different setup costs, which can vary quite a lot, and then some have different annual costs. So you really got to do your homework. But like you say, the big thing is you need to interview them before you go down that road of signing up and appointing them as your administrator, and really get to the bottom of what their mandate is and what they are going to allow you to do, because you don't want to have a restrictive mandate on what you can invest in and not invest in. You want to know that up front before you sign up. So talk to people about what do your other SAS trustees do? What do you enable people to do? Because obviously there's an awful lot of rules to comply with. HMRC authorize a SAS before you start. It's got to be completely all signed off by HMRC. So yes, speak to more than one administrator before you go down the SAS road. SAS is not for everybody. You've got to do an awful lot of homework, an awful lot of learning to become a trustee. Is an awful lot of rules to comply with. Is an awful lot of penalties and expensive lessons to be learned if you get it wrong. So ask, because I know that there's different levels of, should I say, leeway for certain strategies across administrators. So ask those questions. Find out what they will allow you to do.
Yeah, great. I think that's great advice. And I think, I think up to a few years ago, there wasn't really a lot of information out there. You used to either just rely on your accountant, provided, your accountant's actually clued up on SAS funds. Not a lot of accountants are, I find, actually.
I was laughing, sorry.
Yeah, no, absolutely. And unless you
speak to a specialist person, if you want to know about SAS, find the experts. I mean, I personally, I'm not giving you advice. I'm just talking about my experience. This is not advice, but it's the same with anything, right? You want to speak to the person who's the industry expert, and a lot of accountants don't know much about SAS. I have tax accountants because I'm not a tax specialist, and my accountants do know about SAS, and that works for me.
Yeah, absolutely. And I'm fortunate in a way because the firm that I'm with, it's a top 50 firm. We have every practice area covered, and so I have a number of pensions lawyers who are within the same firm who I can tap into if I need to ask any questions and stuff like that. But it's not for SME property investors and property developers for that matter, it's not a type of lawyer that you would automatically think of, when you want to go down the SAS route. You'd usually defer to your accountant, and if you happen to have an accountant who's not very experienced in SAS, then you're kind of stumped in a way, which I think is why it's kind of good, and you're involved in the SAS Alliance, and I think that's been a wealth of information. And
it's real. I mean, yeah, absolutely. I mean, it's like the book I just mentioned, those are real case studies. It's not like reading a textbook on SAS, which, it's not everybody's cup of tea. Learning about pensions and SAS pensions is not an easy read sometimes. But going to those SAS Alliance evenings, you hear and you're mixing with people who are all doing different things in property, and you never stop learning. And we're better to hear and learn from than other trustees, and everyone wants to hear success stories because everyone wants each other to do well. So, and it's never ending because that community is constantly growing. There's a Facebook group, and one day we'll be able to have drinks and meet again in person. So I would highly recommend people starting there if they wanted to explore SAS, and
absolutely,
and get an accountant that knows about SAS when you're ready.
Yeah, absolutely. And Michelle, I'm curious to know, you're in your LinkedIn profile, it states that, you're a brand ambassador for a couple of ventures. Can you talk us through, which ventures those are, and
sure.
What do they do?
Sure. Okay, sure. So funnily enough, I was introduced or found a crowdfunding platform that really resonated with me. It was the people. To me, everything's about the people. And it's a platform that I now, I invest in. And gosh, it must be 2 years now. They asked me to become an ambassador for them, and I felt right. And it's Crowd with Us.
Right,
And
okay.
I absolutely love working with them. I love the team, and I love the community of investors and also the repeat developers, and it's just a great community. And they're a brilliant platform. They're actually now known as an investment platform, and they are structured like a mainstream leader, and they work very closely with a lot of senior lenders. And it's just felt right when I met them. And they're very experienced developers themselves, and very honest, very patient when you've got questions. And they sort of really do. They ticked all my boxes, and that's still the case today. And I'm more than proud and happy to be working with them. So that's
Great.
about. So you just never know what being out there, getting active in communities and investing, etc., can lead to.
Absolutely. It does bring up quite a lot of opportunities. So Michelle, it's been great having you on the show. Can you just share, if people want to reach out to you, what's the best way of getting in touch with you?
Oh, sure. Okay, so I'm pretty active on LinkedIn. So Michelle Bryant on LinkedIn. I'm also on Instagram. I'm actually known as East End Kiwi on Instagram. Facebook, I don't use so much. I use it more for being in the groups and the communities, but yeah, under my name on there as well. So thank you so much. It's been great. And I wish you all the best with the show. So
thank you very much. Thank you very much, Michelle. And I'll link through to all your contact details in the show notes below. And so thank you very much again, Michelle.
You're very welcome. Thank you.